Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning as usual on November 3rd. So it's obviously been a very interesting and encouraging week for the market. The past 2 or 3, maybe 4 weeks, I've been trying to say I do see a pretty good setup in the market, meaning a lot of secondary indicators that I don't really trade off of, but sentiment, breadth, and frankly, just some anecdotal stuff. I know I'm not a feelings guy or a gut guy, really. I'm more of a system guy, but you've been around here almost 25 years in the market. You pick up on some things, and it was just getting very long in the tooth. And I just thought if something could go right in the world, the market might react. This week, what went right, so to speak, is we're seeing interest rates come down pretty hard, about 30 basis points on the treasury rates, but we're also seeing some of these charts break, and I'll show you they're kind of breaking 50-day moving averages, at least as I record this. We'll see how it goes, okay? And the market's up. Most indexes across the board are up 6 or 7% this week, 5.5, 6, 7, something like that. So obviously a very good week. Now, to this point, getting back to the system, the intermediate term trend has not turned up, which kind of tells you how bad things were, at least in the broad market here in the last 3-4 weeks. We're not seeing many stocks hit new highs yet. That's not a death knell. That's not predictive. It's just descriptive. We're still seeing some stocks kind of get up to their highs and sort of stall out, where other things that are down here kind of rally on earnings or whatever. And we're still seeing a lot of blow-ups. Now, I mean, it's earnings season. You're always going to see some potholes, but even this week, I mean, there's been a lot of stocks that either I am following now, or I followed at some point in the last maybe 3 months, sometime recently, and boom, we're down, 25, 30, 40% sometimes on some of these things. So there's still some landmines out there. So it's not like everyone's rowing in the same direction. But, I have to say I'm optimistic. I'm not bullish. We did a little bit of buying this week, but we're still 70% cash in Cabot Growth Investors model portfolio. But given the setup, given the pessimism, given the 2.5 years from the growth stock top and the 2 years since the NASDAQ top NASDAQ top Thanksgiving of 2021, and the last 3 months, and just some of the just very oversold indicators and all this stuff. I'm optimistic that, again, things have to continue to go right in the world. I'm not saying, interest rates can spike 2% from here and everything will be great. But I am optimistic that the market may have been discounting, a lot of this in the future and might start discounting some better times ahead, 6 or 8 months down the road. So right now, my main message, which I've been sort of leaning to here in the last month, is just, beyond buying or selling, whatever right now, I would just say make sure your mind is at least open to the possibility, not saying we're going to do it, but the possibility that we're kicking off some sort of major rally, not just a month or two, that could bring a lot of stocks higher, that could discount a lot of good things in the future as, maybe interest rates come down, or maybe the Middle East war isn't so bad, or maybe the economy remains resilient, whatever it is. Just make sure you're open to that possibility so that, I know, it's just human nature. The stock market world is not like the real world. It's kind of like, because the market looks ahead, because it's contrarian. And so it's a little hard oftentimes for a lot of people, including those in the stock market, to kind of keep a level head. So right now you want to make sure you have a level head. Be open to any possibility. Maybe the rally fails, but maybe it keeps going. Make sure you have your ducks in a row and your watch list in place. Because if we do go, I do think there could be, that sustained rally that we've all been looking for. Let's just see how it goes, okay? Okay, enough of the soapbox stuff. Let's hop into the charts. I'm just going to start real quick with stockcharts.com. Free service. You can use it online. We actually pay for it. It's a few $100 a year. You can use some extra charts if you do that stuff. I just wanted to show you a couple of breadth charts. And again, these are all secondary. I don't really trade on them. But this right here is the percent of S&P 1500. So that's the S&P 500 big cap, 400 mid cap, and 600 small cap. You add those up, that's 1,500 stocks. And how many of them are above their 50-day moving average on any day? You don't really need a bar chart for this, but you can just see. And so, in early October, it got down to almost 10, call it 11%. It got right down there 5 days. I think this was on Monday, maybe. So this week, maybe it was last Friday. And you can just see it's gone from basically 10 to 50 here so far. I'm recording this, like I said, late Friday morning, pretty quickly, okay? And it's the same story across. So that's the S&P 1500. This is the entire New York Composite, New York Stock Exchange, I should say. It's gone from 15 to 50. That in and of itself isn't like a breadth thrust. I mean, I don't know. I guess I'll see if some studies pop up that I think are valid. But it's just to show you that it's been kind of an across the board, something different. I mean, I guess, you look at some of these rallies, like this was back in late August, which was pretty promising, fell flat. This was that rally in early October. Even some of these, they were pretty nice, but you're not seeing the type of kind of very oversold to, so far it's in the middle. Let's see how it goes. Going forward, if this got above, say, 90%, that would be almost, pretty reliable buy signal, so to speak. But I'm just kind of showing it to you in that sense. You can also look at, they all look the same. This is the S&P 500, so a little bit of a narrower measure than the others, but same sort of thing, 10% basically up to 50, okay? Where it goes from here, we'll see. The reason I'm showing it to you is we're seeing just sort of extraordinary, not just up in the indexes, not just, Apple I think is down today, but it's not just mega caps or defensive stocks or whatever. It's everything kind of is sort of going up, okay? So let's do this. Now let's just hop back into, if I can do this correctly, hop back into MarketSmith. Yay, here we go. Okay, and MarketSmith's a product of Investors Business Daily. You can learn more at marketsmith.com. Okay, so let's just run through basically what we're seeing here. This is the NASDAQ. So you kind of had, I also like that we had a couple of these indexes and stocks, if you look at it like Apple maybe. I don't follow Apple that closely, but kind of a shakeout here. The NASDAQ dipped below its 200-day line last Friday, I believe, and not looking so good. And then obviously it's been like smoke up a chimney here, and it's all the way back to the 50-day line like that. So it looks a lot like that breadth chart is what I'm trying to say. On an intermediate term basis, actually, the NASDAQ, by our measures, this green 25-day line is kind of toying with turning up, okay? But the NASDAQ's the strongest at this point, and as I run through the other indexes, we're not quite there yet, okay? So the S&P 500, you can see it's basically just recouped, quote unquote, only recouped this last decline. Now, I think that's very bullish, to kind of have three waves down. We mentioned 1, 2, and then this third one, and then to immediately recoup all of it within a few days, I think is, a pretty strong situation. Nevertheless, you can see this green line for this one's trying to turn up. So 25 days ago was kind of back in here. We want to be higher than we were 5 weeks ago. So for the NASDAQ and S&P 500, it's close. Some of these others are getting close to. This is the New York Composite. They all look kind of the same here, which is what I kind of like too. We're all in gear. It's not like, we're rotating into small caps, but S&P 500 is down. It's kind of just a whoosh sort of buying thing. Okay, IWM, this is, Russell 2000, back above, kind of toward the 50-day line, still a little bit weaker. Let's see. My point with all these here, as we look at the fifth one here, is just mid caps. Bottom line here is no matter which one you look at from an intermediate term perspective, obviously if we build on the gains, probably get a intermediate term green light next week. Or if we can kind of hold in here for a week and then go, or maybe we dip and then rebound, something like that could work. But I think we just need a little bit more time to confirm there. And of course, we could come in next week, maybe interest rates spike on some whatever, too much refinancing from the Treasury, who knows? And, these things just start to fade back down. So we try not to anticipate these things because there's a lot of times when they look great or it looks like it's just about to break, and that actually turns out to be a great buy signal that goes up, So let's just see how it goes. If this is going to be the real McCoy, I would expect these things to rally here or much higher, over time. It's not going to be a 2-week rally. That's not what we're in it for, okay? And just to kind of emphasize the point, XLF financials, I just kind of honestly picked a few of these randomly. XLF, semiconductor still pretty strong relatively. You can see above the 50-day line, stronger than the market. The IPO fund, a little bit more growthy here. Pretty big snapback the last couple of days. Not exactly like turning higher. Home builders have obviously, interest rates coming down. Pretty good for housing, maybe. So the home building stocks, after a very persistent decline, have shown some, major accumulation. You could just go right through, even like the XBI, which has been awful. This is biotechs. Just consistent bleed here for months and really for years, to be honest with you. Even this thing is picking up steam. Kind of looks like, small cap index or something like that. So all that is to the good. I think just in terms of action items, I would say the next, or, the first 2, 3, 4 days of next week will probably be relatively important in terms of the intermediate term trend. Okay, just leave it at that. Now, in terms of just the, I'm optimistic, but just, I'm also someone who looks at the evidence. So we're still seeing, so this is like Eli Lilly, and it's had a pretty good, I mentioned this before, it's not in the first inning of its overall advance. And when the drug officially gets approved for weight loss, sometimes that is more toward the top than the start of the advance for some of these drug names. But you're going to see it kind of gapped up on earnings, but stalled out a little bit, down today. I think it still looks fine. It's still on my watch list. I'm just saying we're still seeing a little bit of that. Elastic, which I like. I don't think this is the end of the world for the stock. This is ESTC. Not a good week, especially when the market's up. But I mean, big picture, you've had this big bottom gap up. We'll see how it goes. But my point is that you have kind of a relatively strong stock, not on earnings or anything, just kind of get hit with, even though the market's going higher. Okay. And then you just have a ton of these. Again, these aren't all, in fact, most of these are not names that were something I'd be buying tomorrow. But this is like, Paycom, which is an old leader, but, pretty good numbers. Growth is slowing, but the stock fell like 40% on earnings. Confluent was a name that I was pretty high on. I mentioned a lot of time back here. I think it was in top 10 once or twice, but we got knocked out of it early in the summer. And then you can just see the other day, it just gapped down, or here it is, gapped down, whatever, 30 or 40%. Today, Bill.com, again, it's an old leader. I'm not reading, it's more descriptive than predictive to me. I'm not saying because of this, the market's actually weak. I'm just saying there's still a lot of stocks out there that, are getting killed 30% on earnings that are kind of in my wheelhouse, meaning generally speaking, good sales and earnings growth, not my wheelhouse stock strength. This wasn't, something I was watching closely, but that's getting nailed. And then Remitly, which was one that I liked, it was a little thinner and stuff. You could see, we had mentioned this, big bottom kind of up here and then just disintegrates on earnings 20% or whatever. We'll see. Maybe it's a big shakeout and these things march higher. I'd love to see that. But the point is that it's still not, even with the market up or the index is up 6-7%, even with the breadth, you're still seeing a lot of, in my opinion, a relatively high proportion of growth stocks, hitting air pockets out there. That can change tomorrow, can change quickly. In fact, I remember in May when the market was just starting to get going, there was like On Holdings and Axon got destroyed on earnings even while that was happening. So it doesn't preclude the market from going up, but it just tells you kind of the environment that we're in. So we'll be looking for that to change too, okay? Now, in terms of the positive, we are just seeing a lot more good action, okay? So here's Arista Networks. We got knocked out of this thing in top 10 because it nosedived. A lot of these things, right, they nosedived in here. It got hit on Meta's earnings because Meta said maybe we'll slow down CapEx spending, which is, they're a huge customer for Arista. But the stock reported its own earnings, and it's just, I call this a shake and snap, call it a shakeout, call it a banana. I don't really care. But it just kind of came, and just you can see on the weekly chart, shakeout here above the 40-week line, and then huge volume rebound to new, not just RP highs, but new price highs. So Arista looks pretty good. Palantir, PLTR. This was the AI move back here. And then it just got hit on earnings, and that was pretty sloppy. I mean, it went from 20 to 13 or 20 to 14 pretty quickly. So it's put in some time here with some lows. Again, it's kind of had some of these higher lows while the market didn't. And now it's gapped up on earnings. There's resistance up here. We're seeing a lot of stocks sort of have this kind of pattern, meaning they were up, they pulled back, consolidated for, call it 3 months, ballpark. And now they're, maybe they're rallying and they gap on earnings, but there's still kind of some resistance in here. So let's see how it goes. But so far, so good. I mean, on the weekly chart, which kind of takes out some of the noise, it's a very, very volatile stock, but you can see clearly it's an excellent situation. And I would say this volume was one of the 3 or 4 heaviest of the year, okay? ServiceNow, not going to be your fastest moving stock, but this is NOW, new RP peak here. And so it reported earnings back here, it reversed. Again, I'm not that into the day-to-day stuff, but in this sort of, like right now where we are in the market, I kind of am in the day-to-day stuff because it can kind of reveal some things. So here is your earnings move, and then you're going to see this really nice volume cluster day after day after day of big volume buying. Not all these days were up in the market, okay? And, it's sitting near new highs. Now, it's not, again, some of these things are kind of hitting new highs, like even Arista, again, this is super short term. But, it zoomed to new highs. And the last couple of days, it's just kind of sitting there. It's not like it's powering ahead. I think Arista looks fine. And I think NOW looks fine too. So we'll see how it does here. But I do like this volume cluster down here, reaction to earnings. And it's not your fastest grower, but it's looking pretty good. I mean, okay. And then we've seen some of these like Uber. This is very impressive. Not a huge, it was basically a 20% ballpark high to low correction. Dove to the 200-day line, and then you have what I call over-the-top volume here, which means bigger volume than not just last week, but the last few weeks of selling. And you can just see, I mean, you can just see it's just like smoke up a chimney. Again, you're back into an area of resistance here. They do have earnings next week, so, we'll see what happens. Who knows? But so far, looks pretty good. Okay, DraftKings reported earnings last night, okay? And just, again, you're not free and clear here on a lot of these things, but you have sort of a nice launching pad base, whatever you want to call it, for the last 3 months in here. Notice how the August low, which was kind of the ESPN's coming out actually this month with their new sports betting thing. That was kind of the impetus for this decline. But it's held up since then, despite a bad market. Now it's gapping up on earnings. Again, kind of no man's land in here, but certainly better this than down, okay? So far, so good. Shopify, I'm mentioning it. Again, you're kind of in no man's land, but a big liquid stock that gapped up on earnings. DoorDash, this actually was one reason Uber was up, but DoorDash was, obviously this was kind of an attempted post-IPO base, and then it fell only from 260 to 40, so that's a pretty good decline. But this was, we mentioned it earlier here, that it was nice and tight in here and just a bunch of weeks up in a row, a very smooth advance this spring and early summer. And then it kind of corrected in here with everything else, and it did hit lower lows, but tagged the 40-week line, and now, of course, reacted well to earnings. Very big volume here, one of the biggest of the year, and, it's attacking new highs. Again, I don't want to say no man's land. I mean, it might hit a new closing high today, but what you want to do with it is up to you, but looks pretty good, okay? Noble, this is oil drilling. It's down today, so maybe it's a little jump in the gun here, but overall, some of these offshore drillers just kind of, wasn't abnormal selling. I mean, you just see the very tight action in here. Not tight, but very controlled. It wasn't like it was down 6 points one week. It was down a buck, down a buck, down a buck and a half, down, and then kind of up, $4 this week. So let's see how it goes. Volume, of course, up on earnings. Home builders I mentioned, and home stuff. So again, this kind of looks like we're seeing a lot of this stuff too. So DoorDash, not a lot, but some, I guess. You kind of pull back into the 200-day line. Uber, not straight down, but pull back into the 40-week line, 200-day line, whatever, okay? So here's Pulte Homes, PHM, pull back into the 40-week line. This could be a situation you look back a year from now and like, oh yeah, just totally normal pullback. Of course, you live through it. It feels different. But you're just seeing, it did report earnings here and did find support, but really it's been this interest rate decline that's pushed it up. Again, if interest rates go up from here, will these come down? Probably. But you just have to go with what you see. TREX, this one's not as strong, but we are seeing some of this. Again, here's a volume cluster on the downside. Pulls back here, a little bit below the 200-day line, obviously. But now it's earnings, yes, plus the interest rates, and it's, recovered. It still has a lot of work to do, but my point is you're seeing things that there's a lot of buying there. My guess is if these things pull back, I'd be surprised if they melted down. They'd probably pull back and find some support in here, just because a lot of people a lot of weak hands are likely out, and a lot of people were buying it right off the bottom that are probably stronger hands, okay? See how it goes. Just a couple other names. Here's Howmet. So aerospace, it's kind of across the board right now. We'll see how it plays out. But again, you're kind of getting this dive. This one kind of looks like TREX, a little bit below the 200-day line. Sort of some accelerating buying, capped off by earnings. AXON, which I mentioned, got nailed. This is when it got nailed in May, just as the market was ready to get going. But the daily chart is very messy, but this whole pattern right here is pretty proper, to be honest with you. They have earnings next week, which I'm sure will tell the tale on November 7th. XPO, this is trucking. Again, it's kind of a broad advance. So here's your late October shakeout, right? Right back down to support below the 50-day line, and then reports earnings and snaps right back. Again, kind of back to its old high. So, we'll see how it goes. And just last but not least, even in oil's less uniform, like I showed you Noble and stuff these days. But this is Chord Energy, CHRD. And, it's been holding the 50-day line. And again, it's kind of had a nice reaction to earnings. Not the most liquid name, 500,000 shares a day, but acting pretty well there as oil prices remain elevated. So the bottom line is, you look at the weekly chart here of the NASDAQ. Again, you kind of have this 3 waves down into the 40-week line, a little bit below. And now you have this 1 week so far, snapback. And I think what's encouraging is you had a couple of days of, it doesn't look like it, but a little bit above average and accelerating buying volume. maybe I'm reading too much into it. That stuff can go away. It's not something I really trade off of, but it's certainly a good sign. I think how we react to, say, the 50-day moving average today, maybe by the time market closes, we're down or something, and how we react early next week. Do we hold on to these gains? Is there some bad news that comes out this weekend and we hold on to the gains? Or, do interest rates go down a little bit more, but the NASDAQ's down 250 points on Monday because something or other? You know what I mean? So I think it's just going to be a little bit like that. And if we get a little bit of time or some further strength, the intermediate term trend can turn up. And then it's really a matter of seeing if we get some real leadership to develop. So it's a step-by-step process. I would say this week is a great first step for the market, given the setup and the pessimism and the oversold stuff and some of the positive earnings moves we've seen and some of the positive volume clusters we're seeing. So I'd say it's a great first step for the market. Now we need to see, step 2, 3, 4 play out here in the days and weeks ahead to see if we're on, if we really are kicking off that sustained advance we've all been waiting for. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.